Thank you for tuning in to another edition of the Volk Report. This report, yes, yeah, come on in, come on in. Snoopy, sit down. Um, I just want to let you know that on behalf of the company, as you know, we've been restructuring and we've had to let some people go as a result of the downsizing. And um, it grieves me to tell you, Snoopy, that we're going to have to let you go. You're, you're fired. Snoopy, you're fired. What? What do you mean I'm fired? I've been working here for like 45 years. You can't do this to me. I have puppies to feed and birds. Snoopy, it's not personal. It's just business. You know this, okay? You in Woodstock. I'm sure you're gonna be okay. You can find another gig somewhere else, but we have to let you go. You guys suck. Hey, don't break that, Snoopy. This is how you know that the economy is in serious trouble when Snoopy is losing his job. I want to change the old saying that says that a recession is when you lose your job, but I'm sorry, how's it go? A recession is when your neighbor loses their job, but a depression is when you lose your job. Well, I'm changing all of that. I'm saying that depression and economic catastrophe is when Snoopy loses his job. That's right, ladies and gentlemen. Snoopy has been fired by MetLife. They're letting him go. I don't know what the world's coming to. How do you fire Snoopy? He's cute, he's cuddly, he's every dog owner, dog lover's idea of a pet, and you just kick him to the curb like that. You know, no severance, no nothing. Just let him go. I don't get it. But enough of Snoopy. Here at the Vulcan Report, we get into real news. Looking at the financial sector, ticker symbol FAS, as you can see, this market is trying to have an upward trajectory, trying to get something going here from the slightly negative pulse wave. Nothing committing to the downside at all, though. So possible upside breakout is very high right now. Again, you can't have a continued stock market rally without the financials leading the way. So right now we're waiting to see if that breakout is going to be imminent or not. One thing of importance, though, is that the US dollar, you got to see this one in order to believe it. Central bankers aren't playing around. They mean business. Look at this US dollar. Will you just look at that? Breaking out above the 98 handle, just as I told you was going to happen. It breaks above 98 and continues to move. So you can see here how the Fed has managed to prop up the dollar and be able to build up enough strength for it to break out and try to head back up to par. So that's what's happening right now, and it's locking in on this upward trend here, which doesn't work well for the euro and for the pound sterling and other currencies. So this is pretty interesting to watch and to see this thing take off back up to where it was. They're defending the dollar with everything that they got, and they're throwing everything they got at it, which is also very, very curious. So what about gold? Well, gold's been catching a bid in that as well. So it's trying to come up. It's trying to move along this ramp here. I see an extended, elongated part of it before it hits the second wave upward burst of the ramp to get it to that 1400 level. But right now, as it stands, we got to be patient with it and let it do what it's going to do. But again, we're not married to the long side of any market. That is why you hedge your physical holdings and using the paper markets. This is why we go both long and short, so that we could capture whatever happens in these markets. Even if our belief is wrong as far as if we think it's going up or down, you can still benefit as long as you follow the pulse waves. That's what they're designed to do. And as you can see, we've had some periods of increasing volatility, but as it stands right now, the market's trying to decide and make its mind on what it wants to do. I think we're in the beginning stages of this pattern here developing, and that's where we are right now. And then we shoot up here, over $1,000, and I think that's the next thing that you're going to see here. So that will put us well closer to that 1400, and we should be able to close above it by the end of the year. All right, now silver is still struggling. It's in the oversold, trying to come out of this situation, but it's under pressure. All right, right now to do so. It's really struggling. The Fed is really keeping this one down more so. It's selling in the silver more than it is in the gold. It's doing whatever it has to do. It's even at the point now where it's even selling a little bit of equities to prop up the U.S. dollar. I think they're showing signs of exhaustion. It's getting difficult for them to keep both the bond market, the stock market, and the U.S. dollar propped up. Pounding the paper, gold, and silver markets is just not enough to finance the overall operation. And that's why I'm saying the give and go is gonna let go, and gold and silver is about to explode higher because they can't keep the balancing act alive any further. And I think that's what we're seeing the signs of here. It's they just can't beat it down the way they used to, and it's going to be very interesting moving forward. But again, I see $22 coming up here in the silver, and I do see it before the end of the year. But what about the miners? Well, you can see here the miners are getting stronger, about to break out above the $14.44 first resistance level, getting it next to the $16.84 handle. Then we get to the $18.21 handle, and then the $26.48 handle, and it's off to the races. And that's the trajectory that this is following. This is a steep ramp right here, and that's going to really catapult this thing well above 35. Put it right into the stratosphere. That's what you want to see. Miners stronger than the physicals. The miners are going to lead the way to the promised land in this precious metal space. So keep a close eye on the miners, because once it takes off, once the rocket ship takes off, that's all she wrote. Here we are starting this pattern here. Here we are. You saw what happened before. The next leg is steeper. As you can see here, we're in a negative pulse wave situation with the JDST, which is showing the hand here that the Fed is losing control against the metals manipulation. You can see here that the miners, that upward trajectory is basically unchallenged, because now we're below the Kumo cloud in a JDST. It's starting to pull back. Its wonder breakout and the Kumo cloud of death is over. It looked like it was going to just punch right through there and keep running, and all it did was go sideways and then boop. Okay, that's why we call this the Kumo cloud of death. All right, you can't trust the price action in it. All right, here's the nugget. Same thing. It's still in that Kumo cloud of death. All right, it looked like it was going to break down and just fall apart, but here you go. All right, so the big miners are stomping with the juniors right now. Once this thing breaks out and above this cloud, this resistance level of $20.41, it should slice through it like butter, hot knife through butter, and just keep right on going. And this is a steep incline ramp right here to catapult this up to above 35. Taking a look now at the bearish argument, as you can see, unchallenged. All right, you're in a negative pulse wave and you are declining. All right, you stopped here, but look where you are now. You're starting to test the lower end of that, and yeah, you have a nice floor here at a thin layer Kumo cloud, but it's elongated out, and you don't have any steep ramps to try to get it back up again. So this should be a glass floor that it should just fall right through and collapse. And we're looking at dust now. Alright, finishing up looking at AG, you can see it was declining, and now it's broken out. Okay, now it's in a positive pulse wave, and it's gunning for the $9.03 resistance to get it up to $11.12 resistance, and then here at the bottom of the Kumo cloud at the $14 handle, and then once it gets back above this Kumo cloud and breaks through 16, we're off to the races up to 20 to close by the end of the year. Alright, looking at Pretty Ricky. See, it's already started it. Look at it. Look at that. This is about to cross up and over. Once it gets above $9.90, it's gone. It's gone at that point. Alright? That's what you like to see. Alright, and then once it gets above here, has a steep ramp here to put it above that $10.50, get it up to 11, but then you kind of flatten out here. We'll see what the next few weeks will look like, but it should have a nice steep ramp developing to get it above 12 by the end of the year. Alright, so now at the end here, we're going to, this is our finishing segment, looking at the power of the pulse waves. One thing a question that came up from one of our viewers is dealing with the pulse wave price triggers and more narrow range trading scenarios and periods of lower volatility. So for an example, if you take a look at what happens, it kind of moves like this. How do I say it? Okay. Let's say one of the situations are running away from you, like in this one. On the 18th, October 18th, when it closed at $9.15, the next day it gapped up higher. Alright, so if the market gaps up on you, well beyond your entry price, what do? Well, for the most part, the first thing you do is you want to always have your bullets ready so that when and if the markets do gap, they gap in your favor. Alright, and the market runs away and takes you with it. Alright, there's nothing wrong with the runaway market. You want it to run away with you. So you put your orders in ahead of the market. That's why we put the orders in ahead of the market. Okay, so if it jumps above you, beyond the previous day's close, that's what you do. Alright, that's why you always have your orders working so that you can do what you need to do. If you get stopped out because of the high volatility, the question is, do you get back in right away? The answer to that question is no. You need to wait for the next pulse wave price trigger, because that's going to give you the optimal entry. Alright, so that's what we do. We let the market tell us what we need to do. So we wait, we let the dust settle for the day, and then we regroup and decide what we're going to do for the next day. It's possible that if you got stopped out, it was a blessing in disguise. What I mean by that is, like up here, if you were long and then it comes up here, and then the next day, this bar here stops you out, you may be like, man, I got stopped out. But look what happened. It started a pretty nasty decline. So being stopped up here around the high of the move is a blessing, because then you avoid having to take losses down here, turning a profitable trade into a losing trade. That's why we don't just jump in. All right, you don't just take a market order and just market yourself in. You need to first let the market come to you and tell you what it is you need to do. All right, so keep that in the back of your mind. All right, always use stops. Okay, You know, especially when you're dealing, unless you're dealing with a stock, you know, below $5, it doesn't matter. But always use stops. Okay, you can avoid a lot of pain if you learn to use stops. You know, if you get stopped out, it just means that the market it was not ready to do what you thought it was ready to do. All right, get into the habit and the practice of stopping yourself into a market and stopping yourself out with profit. That's the best way to trade. All right, so see you guys back in the trading room. Remember, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can and give nothing back. It grieves me to tell you, Snoopy, that we're going to have to let you go. You're, you're fired. Snoopy, you're fired. What? What do you mean I'm fired? I've been working here for like 45 years. You can't do this to me. I have puppies to feed. And birds. Snoopy, it's not personal. It's just business. You know this, okay? You in Woodstock. I'm sure you're going to be okay. You can find another gig somewhere else, but we have to let you go. You guys suck. Hey, don't break that, Snoopy. This is how you know that the economy is in serious trouble, when Snoopy is losing his job. I want to change the old saying that says that a recession is when you lose your job, but I'm sorry, how's it go? A recession is when your neighbor loses their job, but a depression is when you lose your job. Well, I'm changing. Thank you for tuning in to another edition of the Volcker Report. This report, yes, yeah, come on in, come on in. Snoopy, sit down. I just want to let you know that on behalf of the company, as you know, we've been restructuring and we've had to let some people go as a result of the downsizing and kick them to the curb like that. You know, no severance, no nothing. Just let him go. I don't get it. But enough of Snoopy. Here at the Vulcan Report, we get into real news. Looking at the financial sector, ticker symbol FAS, as you can see, this market is trying to have an upward trajectory, trying to get something going here from the slightly negative pulse wave, nothing committing to the downside at all, and all of that. I'm saying that depression and economic catastrophe is when Snoopy loses his job. That's right, ladies and gentlemen. Snoopy has been fired by MetLife. They're letting him go. I don't know what the world's coming to. How do you fire Snoopy? He's cute, he's cuddly, he's every dog owner, dog lover's idea of a pet, and you just